Hi, I'm Hasnain and you're watching Accounting Outside the Box. I'm a qualified accountant and I've set up this channel with the aim of providing you with some useful and interesting information within accounting, business and finance. So if you've taken up accounting at college or uni, or if you're running your own business and you want to brush up on your accounting skills, or if you just want to learn more about accounting because it's fun, this channel is for you. And if that's something that's of interest to you, please do subscribe and let's grow this channel together. What is accounting? Have you ever thought what accountants do? Or if you work in a business and you're thinking, what does the accounting department actually do? Well, let's break it down. Accounting can be defined as the process of identifying, recording, and presenting financial information about the business. Accounting isn't actually difficult. If you take every step in a logical approach, it's actually quite easy to understand. Why? Because I think accounting is like painting a picture. We often say that accountants are artists. We use numbers to paint a picture about the financial position of the business. That's what we do. We collect data, we collate it into presentable information, and it's presented to stakeholders. Do you know Warren Buffett said that accounting is the language of business? I would completely agree with him. It is. But the problem is, as with any language, you need to first learn that language. So let's just recap that definition we started off with. Accounting is identifying, recording, and presenting that information about the business. Okay, does that make sense? We're going to start off with the accounting cycle. What's the aim of an accountant? To present its user with financial statements. We need to work towards those financial statements. They won't just magically appear within a business. That's where the accounting cycle will explain the process better. In life, everything has a cycle, right? You start from point A and you end at point B. When you finish, you have to start again. Same goes with accounting. So the accounting cycle is made up of 7 steps. You'll see all of these different words coming in. Not to worry, we're going to go through all of them and I'll try and explain them better. So the first step in the accounting cycle is identifying business transactions. And in my opinion, this is one of the most significant steps. Why? Because it prepares you for what's coming ahead. And that's really important. Let's take an example. You've got a business and you're selling pens. One day you get a bill from your landlord for the rental expense of that office that you've set up. Is that a business transaction? Yes, it is, because it's rent for the office space you're using for the business. So it's a business transaction. Take another example. You send out a sales invoice to one of your customers. Is that a business transaction? Yes, it is, because it's the sales of the business. You receive a credit card statement, which is the personal credit card of a director or the owner of the business. Is that a business transaction? Not necessarily, no. In some cases it can be, but majority of the time it's not. It's something personal to the director or the owner. So that's not a business transaction. To make sure when you get a document, you can identify it as sales invoices, purchase invoices, petty cash receipts, and then separate those documents and put them to the side. This step, believe me, can save you a lot of time. It's easier for you to then post them into the books. Okay, so now you've identified your business transactions. Step number 2 in the accounting cycle is to post journals. What is posting journals? Posting journals is basically the transactions that you just identified in step number 1. You are just writing those transactions into the books of the business using the double entry accounting rules. And that's why I mentioned in step number 1 why organizing and sorting your business transaction documents is so important, because if you've got those organized, posting those journals would be really easy. Nowadays, cloud accounting and softwares have become so common, you don't really have the manual accounting system anymore. So what happens in your accounting software is the journals are posted for you automatically as soon as you make an entry. For example, let's say you've got the same business transaction document which we've already discussed in step number 1. So that invoice you got for your rent for the office space, you post that in your software such as Xero, QuickBooks, Sage. You post that as a purchase invoice. What happens? The software automatically posts a journal to the relevant accounting heads. Debit purchases, credit suppliers. So what happens is that's your double entry bookkeeping. I won't go into detail of double entry bookkeeping in this video, but I will be making another video on the debits and credits and how debits and credits work. The third step in your accounting cycle is transferring to your ledger. What are ledgers? Ledgers are basically a summary subtotal of all of the journals that you've posted in step number 2. Just to explain it better, let's go back to step number 1. You got 5 sales invoices to post, right? You posted 5 different sales invoices. Per step number 2, you posted the invoices. The software has automatically created the journals and posted it to the sales account. What is the ledger? The ledger is basically a summary of all of those journals. Depending on which software you're using, if you open up that ledger for sales, it will then show you the movement happening within that ledger, which will automatically be your step number 2, which you had already posted, the individual journal posting. Step number 4 is preparing your trial balance. A trial balance is basically a list of all of your ledgers with the closing balance. It could be a closing debit balance or a closing credit balance. The rule for trial balance is the debits should equal the credits. In the old days, when we used to do manual accounting and manual bookkeeping, you would have a trial balance which may not balance, and that would be an issue because you would then have to identify where you made a mistake in step number 2, which was posting of your journals. You would go back to step number 2, you would identify the issue, then your trial balance would balance. But with accounting done on software, you don't really have those manual errors anymore. Depending on what software you use, you can easily extract the trial balance at any given time. Step number 5 is adjustments to your trial balance. If you're a business, you would actually know that at the end of a period, it could be a monthly period, a quarterly period, or the annual period. Your accountant would tell you they need to post journals about depreciation, accruals, prepayments. These are your period end adjustments. We've adjusted the trial balance now. We've posted our period end adjustments. The 6th step in the accounting cycle is to prepare your financial statements. Once you've got your trial balance adjusted, you as a business owner are happy with your trial balance. You have posted all of the adjustments that were needed. You then give that trial balance to your accountant, or if you have an accountant in-house, he then takes that final adjusted trial balance and he prepares financial statements with that. Financial statements are a legal requirement according to the local accounting framework. In the UK, we present it under the UK GAAP. Financial statements are made up of your profit and loss statement and statement of financial position. You do have different names of these statements depending on what jurisdiction you're in. That closes your period. As we mentioned, the cycle has ended. Sales will start from 0 again. Expenses will start from 0 again. The only thing that does not start from 0 is your balance sheet, which was your statement of financial position. That was it. That's accounting cycle done. Just to recap again quickly: identifying your transactions, posting your journals, transferring to ledger, generating your first trial balance, posting adjustments to that trial balance, preparing your financial statements, closing your books. That's it. Easy peasy. Accounting is easy. It's not that difficult. If you take a logical approach, every step is interlinked, so you can easily put the pieces together. Thank you so much for watching, and I really hope this video was useful for you and you found something that could be used as a guide. As I've mentioned, this channel is for you guys, anyone who wants to learn accounting. Please do subscribe. Thank you for watching. Bye.